Hey everybody, hey traders, Chris Pulver here. It is 12 p.m. Eastern Time. Happy President's Day, February 17th. I have not done a video yet for 2025, and that's not on purpose. I'm busy with a lot of trading, a lot of other services, all that's good. But I wanted to get back to the TradingView community and talk about where we are at. Sitting here near all-time highs for the second time in 2025. Is the market excited? Well, it seems to be since we shrugged off. This would have been our deep seek news right here. This would have been our tariff news right here. And this would have been our tariff news 2.0 right here. And then last week we had tariff news 3.0 plus CPI plus PPI. And the market actually came back up and poked all time highs. So I believe, I don't know if it certainly didn't close above it, but we have a high right here, the high of 6128.18 and 6127.47. So just a whisker away, 6128 versus 6127. However, the S&P, this classic market cap weighted trickery ETF, we had a high, which is number one for the year. That's all-time high number one for 2025, high at 610.78, and a high right here at 610.99. So 610.78, 610.99. We just poked those highs on the SPY. We also had a nice little run on the NASDAQ. Not quite at or breaking all-time highs, but pretty darn close. We've got 539.15 over here from this high back in December of last year. That's 539.15, and we're trading at 538.84 with the close at 538.18. But the high, just about $1 off those highs. So NASDAQ making a run, getting back towards all-time highs. S&P did poke a high twice, didn't close above it. That's my biggest concern moving forward, is that we have a pretty high bar count on a couple of things here. Again, this is not me being super skeptical and saying this is going to be a top, because obviously we know that the famous saying is the markets can remain irrational longer than traders can remain solvent. So I'm not sitting here trying to call the top. But I will say that based on the movement away from our 200 moving average, and this has been closing up and getting closer, obviously, and price has been reluctant to go dramatically higher. Now, I could connect a couple of dots here, and see a potential and make this a little bit thicker, actually. So connect some dots here and connect the dots there. So could I see the market stretching a little bit higher? Of course. Could we get through these highs, have a little bit momentum into February, into March or April? Could we then have a bit of a correction, pulling back again with another broadening pattern that plays some tricks on the market? Sure. I think upside potential would be fairly limited if we blow the tops off and get into a 640 to 650 window. Look, unless this market is just completely busted, right? Where we got a 2023 move of 20+%, 2024 move of 20+%, and a 2025 move, is it possible we have another 20+%? Oh my gosh. If that did happen, amazing 3-year stretch, probably the best, maybe all time. But man, I would be so worried about some type of correction taking place and just giving us, look, if we have like 60+% year after year after year, man, I'd be worried about like a 30 to 40% correction, maybe even a 50% correction. But again, I don't want to get ahead of myself. Point is, I'm a little cautious thinking that we go dramatically higher without having some type of chop fest first, or some type of fake out trade. I wouldn't be surprised if the market fakes out this week. It might be a very indecisive week. I think the biggest news coming out in the next 2 weeks is NVIDIA. And I know that seems lame because we already had a great opportunity to buy NVIDIA, but this is where I was timing the trade right around that 200 moving average. This is stuff that matters to me. This 200 moving average on NVIDIA, I said way back here when it started to pull back, I was like, don't be surprised if we come back and find the 200 moving average. And so I was getting a little bit more bearish up here near these tops. In fact, I even went as far as saying that when we hit this high right here, I thought that we were probably going to hit the 200 moving average before we make all-time highs. And I was right. Now, I understand that we tested the all-time high, but we didn't close above it. And so we had a fake out there, and this thing came straight down over what was really some funny little conference timing and then deep seek. And we had one of the biggest single-day market cap drops ever in the history of a stock, but NVIDIA did that, and then we bounced up, and we're up like 20% off the lows. So timing wise was I waited, patience played out. I got the trade that I wanted. I did some ratio spreads and I did some sell puts and I did some bull call spreads. I did a lot of options right around that timing around 120, and that's paid out really nicely in the last few weeks. The reason I'm saying this that is important to me is because if you look at the S&P, we are facing a very similar stretch. We're at 322 bars on the daily time frame, which in my opinion is a lot, especially for the index. We are sitting here with a decent move away from the bar. This one's gotten a little bit closer, but if we go a little bit higher, my concern is that we go high enough to revisit a stretch away move like this and start to pull back. A stretch away move like this and start to pull back. A stretch away move, if we went higher this week or in the next couple weeks, we stretch away, we get a percentage amount that is enough to get the market to then turn a little bit. Okay, so that is the S&P with a pretty high bar count. The Dow, okay, same type of thing. We have almost an identical bar count. Last time we hit this level was back down in November of 2023. We are now 300 and roughly 21 bars away. The Dow is looking like it's kind of coiling in here. Does the market blow the top off and hit the highs, but then fall? So I just think a correction or at least a hesitant bullish market is the play, right? I'm not bearish. I'm just saying I would rather be bullish at a pullback. I'd rather be, not buying all-time highs and getting faked out into it when I think that a pullback is probably a better opportunity. So I almost think the easier trade would be that we clearly have a fake out here and the market starts to work its way back into this chop or come down to find the 200 moving average. The only issue is I don't know why. Like, why would the market sell off? Is it going to be chalked up as like, well, inflation data was high, but the market didn't react to it until now. Now it's more important, or layoffs are happening in DC, and therefore it's translating into people getting worried about the job market. But I don't know. It could be some weird news where it's like, why is that happening? I don't know. Find it in the news. I don't know the headline, but I do know that price action will likely support my thoughts. So let's see what happens. But okay, so we've got S&P with a high bar count, Dow with a high bar count. The Russell has already hit several times actually, and this continues to be a pretty interesting trade where I want to be long the Russell, but I don't. And I say that because of 2,000 companies, around 65 or 70% of these companies don't make money. They're not profitable. And as appealing as it is to say, well, small caps should outperform large caps because they've been beat down and underperforming so long. Well, I think we're at a point where it's like there's a reason they're underperforming. The quality at stock is pretty poor. Now, take that into like an IWY, which is top 200 growth. That's a different story. We're sitting here way above all-time highs with some consolidation. I think this thing has room to maybe run. Again, I'd like to see a nice little bar count. We have had this stretch away move since about almost 500 bars. And I know that we tested here. So we tested the 200 moving average right there. We tested it there during that August sell-off last year. But we have closed above this for nearly 500 bars. And again, I think that's a little bit overstretched where if we have a big move and a distance away, big distance away tends to pull back. Big distance away tends to pull back. Big distance away tends to pull back. So if we blow this off a little bit, let's say that we have this consolidation here, okay, market stretches up. If we get a decent percentage move, then sure, I could participate in that a little bit or just wait and be patient and get the pullback that I want and hopefully buy a dip at a much better price. So I prefer, and the options chain isn't quite as good as, IWM is very liquid and has lots of opportunities for us and lots of options and strikes. IWY doesn't have the same. IWX, which is the top 200 growth, again, you can see this really nice test of the 200 moving average and trying to inch up towards these recent all-time highs. So these to me, I think are better ways to trade small cap would be your top 200 value and growth. I think you're going to position yourself for, kind of the cream of the crop in value and the cream of the crop in growth, at least in the small cap space, which I do like. VIX, I'm not really looking at VIX to be, short or long. We have been lower than 20 for a while. We're trading in the teens. Obviously, if we came back down to like 12 or 11 on the VIX, I want to get long volatility. Otherwise, I'll just hopefully, if we have a big spike up towards 20 to 30, I'll probably short volatility. I like to use the volatility instrument like a VIX and then try to position myself for a dip on SVXY. Dollar index, another interesting chart. We have had a weekend fake out in the currency market, high to low. I do think that there's some pretty strong levels around like this 106 to 105.50 zone. To me, we're going to see what this dollar is made of. If this trend, which has been a pretty crazy uptrend since September of last year, if we sweep these highs, and all we're doing is pulling back in a type of correction, I think this 106 to 105 area holds as previous resistance becoming support. If the dollar catches a bid there, maybe another range bound instrument, more ranging, more ranging. Does the dollar catch bid here? Well, if that's the case, it's probably bad for the stock market. I think the stock market wants to see a weaker dollar. I think, if the dollar gets weaker, it might help with U.S. 10-year yields going down as well. I just think we're going to have stickier range-bound trading for a lot of instruments. Oil, not convinced. I did a nice little iron condor on CL, which is oil futures. I traded right in the middle, collected 20 cents, got out for 12. That was a quick profit. I am long on natural gas. Actually, I'm going to add in UNL. That's 12-month gas futures. I don't really want to hold you. Yeah, that's why I didn't trade it. So I'm trading UNG instead of UNL because I don't want the resettlement of price. But I'm long on this one with a diagonal spread. So I bought a $5 call and I'm selling at 23. I'm already up in some profit. My break even is around $16, trading up to 19.65. So per contract, I'm up a few bucks, and that's good. I'm trying to get it called away for $23, which would give me around $7 or $8 per contract. Gold. Gold is actually outperforming the indexes this year. If we go to the monthly time frame, we have the S&P up around 4%. You have gold, I believe, is outperforming that. There's the start of the year. So gold pretty much right on a rip, up 10% for the year. So gold is definitely outperforming the S&P right now, outperforming the NASDAQ even right now. I still think gold with a bar count, like I mentioned before, I'm a little bit cautious to get crazy bullish here. Now, I could see momentum taking us into a round number like 3,000. Okay. But I could also see the distance away from this moving average causing some type of pause or pullback, right? This stretch away move, we paused for a while. Stretch away move here, we had a pullback. Stretch away move. If we go a little bit higher, I mean, maybe towards that 3,000 handle, at least a pause and lets this catch up, or maybe even a pullback to pull back to past resistance becoming support, or pulling back into some dynamic moving averages. So I still maintain gold positions long. I'm long GLD by quite a bit. I mean, I own shares of GLD. I have a bunch of option trades on it as well. I traded a lot of gold futures last year. In this chop, I was out of the way, had some nice income trades there into Q3, Q4. Silver, I still like silver with a measure move up into the mid 30s or even into the 40s. Silver may not perform as awesome as I want it to, but as long as we stay above, I'd say greater than $26. If we're greater than 26, I'm going to remain silver bullish. If we stay with some type of dynamic support here where we maintain higher lows, obviously it'd be nice to see higher highs. And that to me is when silver can look a little bit more exciting. Also having measure moves to the upside, that'd be a pretty nice bull market on silver. Bitcoin, I think a lot of Bitcoin enthusiasts are wondering if this is just nothing more than consolidation. We had a big consolidation window back here, and we had a blow-off move after the election, and now we're looking like another similar consolidation move here. So, I'm still liking the accumulation. I'm still looking at a lot of option trades. So I like this. We come back down to these equal lows, put in some, I do some cash secured puts on IBIT, FBTC. I can, buy some more Bitcoin and add that exposure. We just get back up to range levels. I'm sure everyone's wondering if and when we break, where's the next big level? Are we going to 125, right? 125K, we're going to 150 this year. I don't know. We're seeing more and more news on adoption. Now we're looking at like individual states in the U.S. are starting to consider or adding Bitcoin to their balance sheet. This whole idea of a reserve fund for something on Bitcoin, I don't know how that's going to work compared to the U.S. Treasury, or how it plays out with the dollar, how it plays out with gold. I don't really know, but I do know that there has been wide acceptance and adoption and regulation around Bitcoin. And I think Bitcoin is, it's a digital currency play. It's a dollar alternative play. It's also an AI and Web 3.0 play. So I think there's plenty of reason to get excited about it, optimistic about it. But again, I still think it's risk capital. I don't think the markets can go higher without Bitcoin, going with it, or at the same time, I don't think the markets go down and Bitcoin goes up. I think we're going to have pretty much a correlation. If the markets go down, Bitcoin's going with it. If the markets go up, Bitcoin can go with it. right? I think there is a lot of interrelatedness here that traders aren't necessarily thinking. So all the Bitcoin maximalists out there, you have to cheer on the bull market. You really do. I don't think it works the other way. Markets don't go down and Bitcoin doesn't go up. It's not going to be that way. There's going to be something where they're interrelated and correlated. I think you have to have risk appetite. But again, if the market's going to stretch away and blow the tops off or even range bound, then just expect more accumulation. And what I'll do is the same. If we're getting these lows, then I'm going to accumulate more at these lows and just try to time this out of the way with some margin for error. And then we break and go higher. Hooray, make some money. Okay. Other instruments there, MicroStrategy. I've got some shares of this one. I'm looking to get it called away around $310. I own the shares down to $279. It's just an income trade for me right now. We've already had earnings. There's nothing major nothing major in this one. I've got this one out to March. If we go down further, that's okay. I've got a put that I'll ride out a little bit longer. It's a collar trade, so I'm protected on the downside a little bit, as well as getting it called away at 310 and rolling for some credits. Coinbase put in some ratio spreads down here, some income trades. I'm trying to stay out of the way on that one. Ethereum had a decent recovery over the weekend. I still think this has to break the trend line and stabilize a little bit more. I think Bitcoin's a better trade. Copper has had an awesome rip, but a pretty healthy pullback here. Copper is pretty much, to me, the play on China. If you like China, look at HSI. Okay. And HSI has cleared all this chop since the September rip. We bottomed out here. This was a technical level that I talked about a lot in Q4. If we can break these highs, well, we have broken the highs. Well, can we run to symmetry? This swing to this swing. Do we make a higher high in HSI? If we do, the stocks that I like exposure to, Alibaba, Baidu, KWeb, FXI, anything kind of China related. I'm not saying like go full on China basket, but the stocks that I do have exposure on, like I said, Alibaba, Baidu, KWeb, and FXI. And JD.com are my big ones. So it's like 5 or 6 stocks in total. I've traded them a lot since last year. I've dumped some of the positions on some for profit. The ones I still have exposure on and ownership of, I own JD, I own Alibaba, I own Baidu. I'm looking to run with those hopefully a little bit longer. China's been doing really well. Foreign markets have been outperforming the U.S. markets. Here is the German DAX, unbelievably bullish. And I look, I don't think this is by accident. I think that you have the underperformance for most of the world compared to the U.S. It wasn't a surprise that you started to see that rotation out of expensive U.S. valued markets and high valued stocks into other things like beat up Europe. This was a very contrarian play because everyone last year was like Europe's uninvestable, China's uninvestable, and what are they doing this year? They're right out of the gates with some of the biggest gains we've seen so far. So the leaders of the year, German DAX, even the UK, the FTSE is doing pretty well off these lows. China's leading the way as well. So we have some BDOC, like, I'm putting like air quotes, like uninvestable stocks and indexes that are actually shining in a big way this year. Does this mean something I want to call the top on? Of course not. What we have in any capacity is some type of pause, some type of correction, and then I look to see if there's a dip to maintain that momentum. So I would like to trade the DAX, on a dip or a pullback. I would like to continue to stay with my China exposure. I've got some Bitcoin, I've got some gold, I've got some silver. Oil, I'm probably staying out of. Copper, I put in a bit of a play on copper, which I think is pretty safe. Coming back into this low here. So I think copper, even if we have a run and then a pause, I'm looking for copper to maybe make some higher highs. As long as China maintains bid, I think copper looks good. So I'll stick with that for right now. A couple notable things here on the U.S. Treasury yields. The 10-year has gone up and then faded. So I'd like to see the U.S. 10-year get some fresh lows, follow the dollar index as well as following the 10-year yield. If the dollar continues to drop, so if dollar index goes down and 10-year yields follow, that's a good sign. I think that's also a way that the stock market could justify making higher highs. I don't know how much progress we're going to make here. Look, the Fed is pausing. How much more can we have the rates drop, or how much more can yields drop? I don't know. The Fed has likely pushed out their cut this year into like September or October as opposed to June. So if anything, I could see the yields dropping a little bit and then staying bid, dropping in here, staying bid, and having some type of range between like maybe 4.25 and 4.75, maybe like a 50 basis points range. I mean, I would love, like anyone else, to see that, okay, the Fed cut rates here and the 10-year yields bottomed. The Feds are pausing. I'd love to see this come back down. Maybe it does, but it takes a lot of time. Otherwise, I think that we are still seeing higher inflation numbers. I think the yield market is still looking at kind of pricing in higher inflation and higher for longer, and therefore I'm a little bit skeptical on how much lower the 10-year yields can go. Signs of the potential, discomfort and bear market ahead would be the 10 and the 2-year disinversion, the 10 and the 3-year disinversion. This to me is, I've called this borrowed time, especially the 10-year and the 3-month. Every time that we have placed in a disinversion here, I go back to the 1990s, 1980s. This is the technical day of a recession, and it's always come after a disinversion. Now, it's not always like the day after. Obviously, there's a window. There's like a 12 to 24-month window, but I think that the disinversion, recession, disinversion, recession, disinversion, recession, disinversion, recession, and longest and deepest inverted yield curve, we come out of that disinversion. This is why I put borrowed time. 12 to 24 months, probably a recession. Does that mean we should be short the market now? Of course not. Right? Does the market even have to go down during recession? Of course not. In fact, it's like 50-50 whether the market goes up or down. But I do think if we're sitting at all-time highs and recession happens, we're probably going more downside. Okay, mortgage rates have come down just a little bit. I hope they come down more. Couple of indicators. I mean, we've got about market breadth-wise, we have about 54% of stocks above their 50-day moving average. We still have about 59% of stocks above the 200 moving average. So market breadth is, it's fine. It's kind of a 50-50, right? If this starts to go higher and we're getting higher and higher, stocks above their 50-day moving average, then more market breadth is starting to print. This is also a good timing indicator when I've got 80 to 85 to 90% of all stocks above their 50-day. I'm probably looking to short the market, and vice versa, like we had down late last year when we come down into like less than 20%, 15%, as low as 11%. Then that to me is a good timing indicator to buy. So right now we're right in the middle, which means it's just noise. This would be something I take action on. This would be something I take action on. In the middle, I just wait and find my trades. Okay. Individual stocks. I mean, there's a lot going on. I'm trading a lot of decent earnings this quarter, which has proven to be pretty lucrative thus far. So yeah, I mean, there's a lot going on. Look, we got bar counts. That's probably my biggest takeaway from today is bar counts. We got a lot of high bar counts on the daily. Okay. Not saying that we can't go higher, and certainly we can, but I wouldn't be surprised to see this market fake out a little bit. Obviously, if it blows off my top here, then I'm going to delete this trend line. But this bar count and this distance away, something tells me I'm preparing for like a March, April, May correction in some capacity. Whether it's just a pullback and allows this to just move up and catch up, that's fine. But something we're not running, just running to the moon without having some type of reality check after a 300 plus bar count when I see stocks do this all the time, indexes too. Okay, so we'll see. But the last few weeks' news, it's been a pretty wild start for the year, as expected. There's going to be lots of news and lots of noise every single day. Trump, as well as the markets, DeepSeek, tariffs 1.0, 2.0, 3.0. Trump is going to be a vocal president, as we know. In fact, I mentioned this last week. There's not a single president that I remember seeing on the economic calendars, and President Trump has popped up twice in the last 3 weeks. So he is now a high impact flag on your economic calendars that shows President Trump is speaking. So expect that to be also noise, right? We'll see. But between the Fed, between Trump, between this AI race, between where stocks are valued, between what's performing well in the U.S. or what's underperforming or what's performing outside of the U.S., which is China and Europe, in other countries. Bitcoin's obviously a big story now. What's gold and silver doing? I mean, all this plays out. Like, I feel like I'm pretty diversified this year, playing a little bit of everything, keeping the risks spread out, casting a very wide net, give myself lots of room for error. And so far, so good. I mean, I've actually, last week I hit another fresh high in the portfolio. I think I'm up close to 7% for the year, which is not bad swinging out of the gates for a market that is, maybe up 3 to 4%, maybe, right? With some potential, choppy waters ahead, perhaps. So, all right, I think I'll wrap it up from there. Appreciate everyone checking this video out, and talk to y'all soon. Thanks, bye.